that impact is kind of an underrated and an important lens for viewing investment opportunities and also for assessing the potential for financial returns. So I think it's our thesis that the best financial returns will be linked directly with the companies that are having the largest impacts in some of these metrics that we look to influence, as mentioned, things like CO2 equivalent reductions and food production, etc.
Hi, everybody. Welcome to the AgTech Top Startup Series. We've looked at well over 4,000 companies in the agriculture and food tech industry globally. And our goal is to identify what we thought were some of the best startups and investors from around the world. And we're here with one of the best investors from around the world. He's Matt Cohen, Director of Technology from Pangaea Ventures. Matt, thank you so much for taking the time to do this. I really appreciate it.
Yeah, thank you for having me. I'm not sure if I'd say that we are one of the best, but we're at least trying. We
Hey,
we're in the battery circle. So
absolutely. No, when we think you are, and I think we'll talk more about the interview, some of the questions that are in the interview, and I think the audience will have the same feedback as I do. But we wanted to have this interview because we thought you guys are a really unique fund. You're not just an ag tech investor, you are more of a hard tech investor. We'll get into that in a little bit, but I really wanted to highlight both your investment thesis. I want to talk a little bit about your portfolio. We're going to have some broader general market dynamics, what's happening in agriculture and food tech, and even broader outside of that, if you'd like, and then highlight some of the unique aspects of your fund. For the audience, for those of you who don't know who is Pangaea Ventures, you guys have roughly $200 million under management today, invested well over 30 portfolio companies, a lot of exits. Congrats, guys. But one of the interesting aspects of your fund is hard tech investors focused on impact in the world. We'll get into it a little bit, but I mean, you guys tell it on your website, you've saved or helped impact more than 18 million lives. I have notes here. You have reduced 55 million tons of CO2, 153 million tons of more food made based on the impact of your investments, the work that you guys are doing. Really impressive. So with that, Matt, I would love to know a little bit more about who is Pangaea Ventures.
sure. Well, first, I'd like to say that really it's our portfolio companies that are making all of those great impacts on the world and solving some of these fundamental challenges. We're just trying to help them along the way and play a little bit of a small part. But with that said, we're a venture capital firm. As you mentioned, we have a physical presence here in Phoenix, Arizona, where I am, along with about half our team, with the other half in Vancouver, in BC, in Western Canada, and together invest primarily across North America in positive impact, hard tech companies that can really make a positive difference in areas like energy and clean tech and climate tech, and of course, ag tech and food and sustainability, and also in the healthcare space. But the unifying theme is looking to support entrepreneurs that are commercializing novel physical science kinds of innovations that can really make a positive impact on the world and all of us in it.
I thought it was really interesting though, because you guys have been around since 2001. So you guys have been around for quite a long time. But I think what was also really interesting is you stayed a relatively smaller fund. And I'm just curious, I'd love to, if there's context. It seems like you guys have a very unique strategy that you like to apply for this space, and it does really well for you.
So, we really found that the best place to play for us is at the early growth stage. And the way that we think about that internally here are companies with the majority of a team in place, typically have some IP in the form of granted or filed patents. And importantly, we generally look to support companies that have a first product on the market at the time of our initial investment. So, we think first checks in the range of about maybe $3 to $6 million or so work really well for helping those companies go from maybe a first customer to many customers, going from maybe 1 to 100 versus from 0 to 1. And that gets a little bit tougher once you start thinking about a really big fund and trying to create really superior financial returns. It's harder to move the needle at that stage in an investment. And I don't mean to demean the work of these mega venture capital funds and private equity funds and some of the folks that we work with down the line once our companies continue to mature. But I think the place where we believe we have a lot of expertise, where we think our venture dollars can make a really significant impact, is at that early growth stage. So staying in that approximate size range. So having funds that are, let's say between about 70 and 200 million US dollars is a pretty good area that works for where we think the biggest opportunities are, and also where there's some gaps in the market. So there's lots of great seed and angel investor resources out there, and there's some really great big funds of late that have come into some of these spaces with billions of dollars under management. And then it's really that middle area where we think there's the best chance for really good, superior financial returns, but also the place where you can make a really significant impact and bring some of these technologies and startup companies that are just entering into the market and really help push the accelerator down and get them to escape velocity.
Well, and you know what's interesting though, and I want to switch gears over to the investment thesis that you guys have. And for the audience, you guys, when we talk about hard tech investor, I mean, we're actually serious about it. You guys are really investing in very difficult products that are really hard to make. I think you're in advanced materials. You'd mentioned novel chemistries, biology. I know there's more on top of that. But one of the other unique aspects is you guys try to focus on investing in companies that meet the United Nations sustainability goals. I'm curious why you blend those two. Why is this a big focus and important for you guys?
So I would say that we really believe that impact, which I think is laid out pretty well within the UN SDGs that you mentioned, that impact is kind of an underrated and an important lens for viewing investment opportunities and also for assessing the potential for financial returns. So I think it's our thesis that the best financial returns will be linked directly with the companies that are having the largest impacts in some of these metrics that we look to influence, as mentioned, things like CO2 equivalent reductions and food production, et cetera. So, to us, it's not really an either or. The strategies, I think, align much more than maybe historically people have thought about. And we really look to kind of quantify that and use that as a tool within our toolbox to evaluate opportunities and to try to help support what we think are some of the very high potential opportunities out there.
It seems like when you look at your portfolio, it's almost like an even spread for in thirds based on the industries you invest in. There's good agriculture, food tech, good amount of industrial manufacturing. It seems like rising in healthcare. Are these the primary industries that you tend to invest in, or is there other categories or other industries that you start to tend to make some more investments?
So we do invest across a pretty wide range of different things. We think of ourselves as thematic investors, and I won't go through all of the individual themes that we think are important, but we do invest broadly across health and industrial technologies and energy and sustainability and climate and clean tech and ag tech and food tech. And there's lots of other buzzwords that you can throw out there, but we really look to support companies that are solving real fundamental problems, and they're not doing it with software alone. So I think one of the key things about us that is a little bit different from a lot of the venture capital industry over the last 50 years is that we don't do any pure play software investing. We think physical science kinds of innovations, whether that's in supply chain or whether that's in a completely different area, will make some of these really big tectonic shifts possible.
It's exciting to see you guys operate in your portfolio because investing in sciences and non-software related companies and hard tech is really difficult. And you guys are doing that at earlier stages too. You're an early stage hard tech investor. And that is, I feel like, extremely difficult because I feel like there's, for the companies that you're looking at, I know you mentioned a little bit early in the introduction, the type of companies you look at, but you kind of sometimes I feel like in this field, you can get stuck in the rabbit hole of going down a research funnel. And then, or there's companies that maybe might be commercially ready. And how do you balance the two for finding the company that is going to be commercially viable product versus a research project?
That's a great question. And I can't tell you how many times we have interacted with companies that are 6 months away from a product for 6 years. And that can be very, very painful as an investor, certainly as a company as well. And having a little bit of a direct startup experience, it's certainly a challenge that everything tends to take a little more time and more money than anticipated, especially within the kind of hard tech, deep tech sectors where you can't just come up with an MVP in a garage in a weekend with a couple of folks in front of some laptops. So that's certainly not how these kinds of things happen in the pools that we swim in. So, for us, one of the things that we learned over the last 15, 20 years of doing this is to really focus in on the stage that we look to get involved, right? So that early growth stage focus that I mentioned, that is really important for us, I think, in deriving good returns and also finding the right alignment with our goals and these startup companies. So coming in at the right time is really helpful. So having some of those key milestones and foundations laid at the time of our first checks, that can be really, really useful way of helping these companies and also trying to deliver returns to our limited partners and also make a bigger impact, right? So impact scales as companies scale. So if a company is not out there selling something and implementing their solutions into the markets they're going into, it's not really going to matter much, no matter how great the technology is. So the the timing is everything in these kinds of things. And we operate a fairly traditional kind of venture capital structure, at least for North America, where we have a 10-year fund life. So that's certainly on our minds as we think about supporting hard tech entrepreneurs that are sometimes commercializing things that can take decades from first discovery in a lab at a university or national lab through to a potential terminal exit event.
Last thing I want to ask on the investment thesis side. Uh, Agriculture is not your primary focus of the fund, but it is a big vertical, agriculture and food tech, or any products that revolve around those industries. Yeah, I'm curious, is there something that you guys see in agriculture industry or food tech that other people don't? And how does that kind of shape your approach to investing or your investment thesis?
Well, first of all, I don't think we're brazen enough to say that we're smarter than anybody else in whether they're financial or strategic investors in this space. Everybody tends to want green, sustainable, organic, non-GMO, what have you, but nobody really wants to pay for that. So I don't think we're unique in that overall view. One thing that I would say that is maybe a little bit unique to the ag tech sector from our perspective is that ag tech is one of the few that can really influence all of the impact metrics that we track simultaneously. So, when we invest in a company doing energy storage, for instance, of course, there's some great um, gains around things like CO2 reductions, right? By being able to incorporate renewable energies on the grid, you can reduce the amount of CO2 from the electricity sector. But agriculture is a little bit different because you can do all of these things simultaneously. So improving yields, for instance, can improve CO2 equivalent emissions, but it can also reduce the amount of water that you're using. And of course, it can improve the amount of food that's being created. And by using more benign chemistries, for instance, you can also improve um, health and impact more lives that way. So I think that makes it a really attractive sector for us as we evaluate opportunities across ag and food, but also across many other verticals. So I think that tends to be an interesting reason for playing in this sector and trying to support entrepreneurs and really staying abreast of all of the great technology innovations that are influencing the way that we grow and harvest and transport food.
It's interesting to see how the impact ag tech can really do for the environment from all angles. And I actually agree with that sentiment. Moving on to the investment portfolio, though, I'm curious to get some feedback on this. You have a big portfolio, and I'm just curious. Is there any deals that you quickly want to highlight or mention, or recent investments that you've had that you're excited about?
Sure, this is always a tricky question, right? Nobody wants to pick a favorite child or anything like that. But one of the more recent investments we did was in a company called Tidal Vision. They're in the Pacific Northwest, and they have developed a more sustainable way to extract chitosan, which is an interesting biopolymer from things like shellfish, so from crustacean. So they can take this waste product, convert it into this biopolymer material, which can be used for a wide range of different things. So when we invested in the company, they were working in areas like water treatment and textiles. But one of the main reasons why we've got excited about the company is the possibility of using chitosan in the agriculture industry. So chitosan has antifungal properties and it can improve growth and yields. and it's listed as a minimal risk pesticide by the EPA. So there's a lot of kind of nascent interest and amazing possibilities of a material like this in the ag tech sector, and having a more sustainable way and a more economical way of producing it locally, domestically in the United States can be a pretty compelling proposition here. So within the ag tech space, one of our more recent investments that I think is worth highlighting is Tidal. I'm also on the board of a company called TrueTag Technologies, which has developed um, optical microtag technologies for authentication, and they're primarily focused on the pharmaceutical industry, so providing on-dose authentication solutions. But they're actually also doing some interesting things in the ag space as well. So they're applying their tags to things like seed coatings for authenticity of different kinds of seeds, and they've developed some smart imaging technologies initially to detect their optical tags, but they've realized that a lot of this technology can also be really helpful for other applications completely unrelated. So for the food industry, for assessing um, quality of things like fruits and vegetables remotely using an inline imaging system and hyperspectral imaging technology. And there's a whole host of other things they're doing within some of these sectors that I'm excited about. And I think that will only continue to increase as we move forward.
Exciting. Really exciting. No, and I enjoy putting VCs on the spot, these types of questions, because they'd love to list their entire portfolio. So,
That's good. I know we don't have all day.
yeah, yeah.
There's a lot of great ones in there. So certainly welcome you and all of the viewers to take a look at our website and get in touch if there's things that pique their interest.
Oh, absolutely. Well, one of the things that I wanted to ask, because majority of your portfolio is on, I would argue frontier markets. That I mean, you are a hard tech investor. Majority of your investments are going to be frontier, especially if you're going after early stage. We talked about it a little bit earlier, but I'm just trying to understand, and maybe you could share more insight about how to gauge timing best way. You know, when you look at like the ag tech space, you'll have, you know, alternative based meats, for example, and you see that huge rise and quick adoption of plant based products. But if you get into, cell manufacturer based meats, it's just the time span for getting to commercial product or at something at scale just seems to take much, much longer than expected. Or on the flip side, if you look at like soil, for example, you see a number of, those CO2 marketplaces that are popping up where you can trade different credits for the soil, that's carbon credits, basically. But then if you look at companies that are trying to remove carbon out of the atmosphere using, for example, microbes in the soil, I mean, the research period for some of those products seem to just extend 10 years. And so how do you guys gauge, between finding companies that are, you think are at that right timing that would meet that fund life cycle that you're looking at, or something that really can come to scale, but also not getting too late stage where it's already commercial, it's already way heavily funded and all this other shenanigans.
That's kind of the constant challenge that we look for. But I think you're right in your assessment that timing is kind of everything when it comes to success or failure within the venture investing community. So this goes back for us to kind of our laser focused early growth stage fund strategy, and really looking for some of those kind of value inflection points where it's hard to just put equity into research projects and things that are going to be in the lab and need to be in the lab for many years to come, whether it's because of technology development or regulatory landscapes and various other reasons why something will not be commercial for quite a long time. And then at the other side of it, if you wait too long and all of the risk is reduced, it's hard to just to see how that's going to be a really good use of your time and money. And we can only invest in so many companies. So I think it's important for us to find that really sweet spot in opportunities that are no longer nascent in the sense that they've found some level of product market fit, but it's not the off to the races. Let's just go scale this and bring in project finance and revenue based financing, and we sort of move past the venture capital area internally. So it's yeah, it's a challenge. It's I think a reason why we have to be so selective in the investments that we make, why we're investing in well under 1 in 100 companies that we interact with senior management, because that fit and alignment, we're just one asset class within many that companies and entrepreneurs have access to. And we want to be a great tool in their toolbox, but we realize we're not the only one. And there's no reason to try to fit round pegs in square holes.
I want to switch gears to just general market questions. Um, and one of the things, I mean, you guys are leading this charge, especially with the focus on the sustainability goals. But when looking at the ag tech ecosystem specifically, just the whole ecosystem across the board, sustainability seems to be the biggest theme. Whether it's software, whether it's the sciences, whether it's services, there's some form of sustainability. And I'm just curious, why now? Why is everyone now really pushing hard on sustainability versus previous? Like, what has been, is something changed in the last, few years that, you know, push people to this point?
I think a lot of people smarter than me have speculated on it accordingly, but I'll give you two answers. The first one, and this is maybe the more pessimistic view, is that enough time has passed since that first kind of excitement around clean tech and sustainability and the bubble sort of formed and burst back in the maybe late 2000s, early 2010s. And now fast forward about a decade, and a lot of those initial thoughts and sentiment have cooled off a little bit. Some of the folks who lost a lot of money are no longer in the market, or at the very least, you have to have a relatively short memory for some of those kinds of things. The other one, and I think the more important one, and certainly the rosier picture, is that I think within the investment community, or maybe just within folks in general, there's been a realization that climate risk and sustainability risk are investment risk. So they're not one or the other. These things are completely linked together. So why not be supporting companies that are directly taking on some of these problems, instead of just saying, okay, this is something that is not going to be affected by a changing climate, or by water scarcity, or by lack of food in parts of the world, and drought, and potential for significant floodings and other environmental disasters. So I think that idea has taken hold throughout the community, all the way from the BlackRocks and Vanguards of the world, all the way down to the angel investors writing $10,000 checks and everybody in between. So that's my belief in it, and I think that will continue. And I think that's a little bit more long-term solution. It's not just a fad of the week. And even though there will be some prolific failures, just like there were 10, 15 years ago within kind of the solar and biofuels and the clean tech 1.0, whatever you want to call it. There's not all going to be winners here, but there's certainly going to be a lot of winners. And I think people want to be on that rising tide to lift some of these boats.
You guys have put together a 2021 impact report. You guys do multiple impact reports. I think, was it yearly? Is it a quarterly?
It is yearly. Yes.
And
Yeah, it's a lot of work, so we don't want to do it too much more frequently than that, but we also want to make sure we have a good cadence of reporting on some of our goals. We've really set goals for 2025 and 2030, and then we try to track our progress towards those goals.
yeah, well, it's a fantastic report. We talked about that before the interview. It's linked below. We'll add the link to the report, but I highly encourage the audience to read it, because what I like about your report is you address the harsh realities that we actually face globally. And you talk about how you guys are working or striving to fill those gaps, or at least addressing, and actually how you're addressing it, and then actually recording or measuring, the progress in addressing those issues. I'm curious if there's anything that you want to highlight from this report, or talk about, or a few things you want to mention about the 2021 impact report.
So certainly encourage anybody who's interested to have a look at a report. We try to be fairly transparent with some of our methodology and how we are quantifying the impact that all of our portfolio companies are making. But yeah, we've set ambitious targets, and as you'll see in the report, most of them are still well under 10% of the way there, and that was somewhat purposeful, right? So we hope that all of our companies, or at least a good portion of them, will really scale up and start to make really meaningful strides in reducing gigatons of carbon dioxide, for instance, or producing tons more food than we're able to today. So, we have been encouraged by some of the successes that we've seen so far across all of the metrics that we really look at. But I think there's a realization that these problems aren't going away. A lot of them, unfortunately, are getting worse. So we have a lot of work to do. And hopefully, our investments, both now and in the future, will continue to chip away at this. And Rome wasn't built in a day, and we can't save the planet in one day either. So this is going to be a concerted effort for many years and decades to come.
I mean, we're 2 years past or into a pandemic, you could say. How do you think as a hard tech investor too? I'm just curious. Have you seen anything that's really impacted either the agriculture industry or any of the other industries that you work with or invest in today?
The pandemic has certainly had a whole lot of influences on a lot of different industries. I think one of the obvious ones is just demonstrating the fragility of supply chains broadly. So certainly within the ag and food space, as we've seen with barren shelves at various points throughout the pandemic, but also in industries more broadly. So a well-oiled machine is great. Globalization, really has done wonders for us as a species, but it also means that we need to create resilient systems to weather these kinds of things. So no one really expected a global pandemic to this scale, especially for multiple years of impact. But I think it's really reinforced that message that we need to be building resilient solutions and supply chains and technologies where we can do more with less. So we can't expect to just solve all of these problems in far away parts of the globe and make things work. We have to figure out opportunities and ways to do more with less and to make sure we have redundancy built in as a feature, not just as a, oh yeah, that would be a nice to have.
Well, I really appreciate the time, Pat. This has been a fantastic interview. Before I want to close out, I wanted to actually highlight some of the unique aspects of your fund and going back to what we talked about at the very beginning, which was the impact that your fund has made. I like how you actually list, the not only the goals that you're trying to meet, but actually companies you're investing into and how are they meeting those goals. Can you share some of the impact or, your fund has made as a whole across some industries? I know we talked about some metrics earlier, but I'd love to hear more from you.
Maybe this will be an opportunity to quickly run through some of the things within the food and ag space where that I'm excited about the impacts we're making. So a little bit before I joined Pangea, so this is back in 2012, we initially invested, I think our first ag tech investment was in a company in the biopesticide space, making these peptides to improve insecticide efficiency and get rid of chemical pesticides that have been implicated in things like colony collapse disorder and removing neonicotinoids. So that company called Vesteron is doing well today and is commercial and making some great strides. And we've invested in companies that are developing microbial consortia to improve nutrient uptake and plant health and make plants more drought resistant. And we've invested in the food supply chain. So in a company called Hazel Technologies that has developed ways to adjust the ripening profile of fruits and vegetables to prolong their freshness and to improve quality and to make sure we don't have food waste because as important as it is on the farm, there's also a significant amount of headroom that that's out there for making sure that that food that is produced gets to our tables and doesn't get spoiled along the way and rot and release methane into the environment. And I'm sure I'm missing a whole host of other ones, but those are just a quick run through of some of the agricultural impacts of our portfolio companies they're currently making today and will continue to moving forward.
And it's you see how even in those examples, how that would have such drastic downstream effects across the entire supply chain of food. or within agriculture or its environment. And it makes sense why you're able to impact over 18 million lives, or you're able to save 153 million tons of food that's either made more of or saving or even reducing carbon. It's really, really impressive, your guys' approach to investing, especially as a hard tech investor. And it's very commendable as well. But Matt, that's the end of the time. I appreciate you almost spending a whole hour with me. I really appreciate it. Is there anything else that you wanted to share or announce to the audience before we close out?
Well, Pangea, we're in the midst of raising a new fund right now. We expect that to be in the range of 100 to 200 million US dollars or so. And at the same time, we want to really make sure we're hitting the ground running once that fund is closed, and we're looking for great opportunities to support in the coming years. So if you're an entrepreneur or know of some great technologies or folks that are commercializing something that might fit within our wheelhouse, certainly encourage you to reach out to me or any of my colleagues at Pangaea Ventures, and go from there. But we're excited about what the future holds. There's a reason hard tech is called hard tech. It is hard, but we think there's some great possible returns, both financially and from an impact perspective to go with it. So we'll see where it goes. There's certainly a lot of unanswered questions right now, but hopefully we will continue to be able to make a big impact now and in the future.
Well, thanks again, Matt. I really appreciate you taking the time. And again, for the audience, we looked at, like we said at the very beginning, thousands of companies within the ag tech and food tech industry globally, as well as investors. And we get to see or try to identify what we think are some of the best investors in the world within these industries. And you got to see why Pangaea is one of the best venture investors within agriculture industry. I mean, you guys are tackling such a problem I think most investors won't touch: early stage hard tech investing, focusing on sciences. You're going after problems that are addressing what are probably the most existential threats to most of humanity, trying to understand how to reach sustainability goals across the board, whether it's, CO2 reduction. We've seen ways of saving food. We've seen ways that you can improve on environment, ways that how you can reverse the change of climate. And so it's really impressive what you guys have done. And not only are you investing in these spaces, you're actually measuring your performance and how you're meeting those goals over time. You create these wonderful reports, which linked in below. But really, again, Matt, this is absolutely incredible. Thanks again. It's been an honor. Thank you so much for the time to do this. I really appreciate it.
Well, likewise, thank you, Kyle. I appreciate the time we had together, and I hope it was helpful.
Absolutely.